Is a Bitcoin breakout imminent as the ETFs begin to go live in Hong Kong tomorrow? What do the ETF flows look like? We have some big altcoin news as Stripe integrates Avalanche. You'll now be able to buy Avalanche with a credit or debit card without using an exchange. What does that mean for AVAX? Is this a good place to pick up some Avalanche token? Also, Dominic Williams from the Definity Foundation came out and said 95% of crypto is snake oil, meaning they don't really do anything, on the back of Forbes coming out with their own article listing zombie chains. We're going to discuss that, which ones are actually zombie chains and which ones did Forbes get wrong. We're going to take a look at the markets. We also have the founder of Imminent joining us, a new DeFi project that is looking to flip the world of staking on its head. We're going to talk about that and much, much more on today's episode of Sin City Crypto. Let's get right into it. Hola, everyone. Welcome, welcome, welcome. So you might be wondering, where's Robin? Well, Robin and Rocco, they missed each other so much that they decided to run the production together. And so, so we threw Robin in the back, and then we brought Forrest up. So it'll be the David and Forrest show today. We're excited to have you. There is a lot to talk about. We hope you guys had a great weekend. Forrest, how you doing, man? First and foremost, always a pleasure having you on the show. We love having you on. You're part of Sin City Crypto. We enjoy having you on. How you been, man? How was your weekend? Forrest, I think your mic might be muted.
Sorry about that.
You're good.
I've been doing well. Thanks for having me on the show. Apologies in advance to all the viewers. I have terrible allergies right now, so if I sniffle or wipe my nose or sound congested, that's why. It's just nothing I can do.
If he wipes his nose, guys, relax. It's not anything else, okay? So again, we have a lot to talk about today. Let's start with ETFs. The ETF mania, is it done? Let's take a look here. This is from Farside. So on the 26th, so Friday, BlackRock threw up the third consecutive goose egg, 0. Still haven't seen any outflows from BlackRock, but we did see 2.8 million in outflows from Fidelity, 3.8 million in outflows from Bitwise. We saw 5.4 million of inflows from ARK, and Grayscale, 82.4 million flowed out of their ETF, bringing our net to 83.6 million in the negative. We also had this headline article: BlackRock spot Bitcoin ETF grinds to a halt, records longest stretch without inflows. Forrest, let me ask you a question. I mean, we can both agree that the Bitcoin ETF was the most successful ETF launch ever, right? Let's just build that foundation basis right there. With what we've seen and what we're seeing now, is this concerning, or did you kind of foreshadow this playing out like this? What are your thoughts on where the ETF flow is today? More specifically, maybe BlackRock, 3 straight days of 0.
Yeah, I mean, I think it's not too surprising, to be honest. I want to get the correct numbers here in front of me. The S&P 500 saw a 6% pullback. The NASDAQ saw a 8% pullback. So, I mean, it's not surprising. I personally have long since believe on an ongoing basis that Bitcoin is a risk asset and will trade in line, and has historically traded very correlated with the NASDAQ and the S&P 500. When we see large corrections in those two major indices, equities, I think we're going to see Bitcoin pull back as well, and it makes sense to have some outflows. Now, it works in the other direction too. We have a healthy stock market. S&P 500 and the NASDAQ are going up like they did for about 6 months straight, the tail end of which, Bitcoin launched. We saw the Bitcoin ETF launch. I think you're going to see Bitcoin trade like a leveraged S&P 500 or a leveraged NASDAQ. It's going to go up, 3 times the amount that these other risk assets are. But yeah, I think it makes sense. I mean, people at the end of the day, Bitcoin is a risk asset, in my opinion. And I think it's traded like that. It's viewed like that by especially the people that are the institutions that are having exposure to to Bitcoin through the ETF. And when they decide to go risk off, Bitcoin is, in my opinion, an asset that I believe that they view as a risk item that they can, cross off the list, or not cross off the list necessarily, but de-risk from in a risk off when their desired outcome is to be risk off. So I know I bumbled my way through that, but essentially I think it's a result of the broader market pullback in TradFi and equities.
Yeah, I was saw a tweet somewhere or a post that a vast majority of the people that piled into the ETF are retail people, or like you mentioned, Forrest, like swing traders or traders. And hey, got a 2x or a 1.5x, they're completely happy. We are starting to see as filings come out, quarterly filings from publicly traded companies, which ones are holding Bitcoin. I know you and Rob went over this on Friday, that BNY Mellon actually holds some of the ETF on their balance sheet. And I think that's only going to grow. So it'll be interesting to see. But as mentioned, Hong Kong is going live tomorrow. This is from Willy Woo. Breaking hot Bitcoin ETF launches tomorrow in Hong Kong. Here's a little secret from this part of the world. The Asian market and user count is bigger than the US and Europe combined. This is according to a 2022 report. But Hong Kong spot ETF, there will be no gateway for mainland China investors. So the Chinese who live on mainland China, Shanghai, Shenzhen, all the big cities in mainland China, they will not have access to the ETF. And obviously, why is that important? Well, China is the second largest economy in the world. The impending debut of spot Bitcoin and Ether exchange traded funds in Hong Kong won't extend market access to investors in mainland China. This is a quote from, gentleman's name is Jack Wang, a Bloomberg data analyst, said, quote, even for the futures-based crypto ETF listed in Hong Kong currently, the brokers will just directly reject the trade. And so it's important to dissect the facts here and not get caught up in headlines and euphoria. Not saying that it's not bullish. Obviously, news came out, Australia is looking to launch a Bitcoin ETF as well. Obviously, that's not negative, but it's not like, oh my God, it's going to shoot Bitcoin's price up to 100K. Obviously, as the needle continues to move forward, as the pendulum continues to swing to giving more people access to having exposure to Bitcoin via a product that they're used to, they're comfortable with, and that's regulated in their state and country. This is great. Any thoughts on the Hong Kong ETF? And do you think eventually mainland China will have access to it? Is this being overblown? What are your thoughts here?
Just echoing your sentiment, I totally agree. I think all these little things add up, these little wins add up and eventually move the needle in a bigger way. But I don't think that this is some thing that's going to cause Bitcoin to go to 90K immediately, just based off of like new demand coming in. I read somewhere that the ETF markets in China are significantly smaller than the ETF markets in the United States. I don't have the direct comparison. There's just a headline I read anyways. I have no idea if and when mainland China is going to get access to these, but I would say, like you mentioned, it's a net positive. It's a good thing. It's definitely not a bad thing, right? It's a step in the right direction. And I think over time, the more of these small wins that we get, the further it legitimizes Bitcoin as an asset class.
Amen to that. I do want to give a shout out to Rusty. Was that Rusty Bot, Rocco? Gave us 30 Nokia phones. Oh, no, never mind. That's 30. Oh, that's the Norwegian currency. Said moon or zero. Definitely not zero. Moon, maybe. We'll see. We're kind of, Bitcoin, if we look historically,
you say moon,
what
right?
it has done.
Moon.
It's like pre-halving, hype, settle, little bit of a dip after the halving, and then chop, and then a lot of good sound effects there. So, obviously no one here has a crystal ball. Anyone that tells you this is going to happen for certain, don't listen to those people, because no one knows what's going to happen for certain. We don't know macro. We don't know what the Fed's going to do. We don't know what's happening in Japan, what they're going to do. Is the yen going to crash? Are they going to have to offload U.S. treasuries? Guys, remember, they're the number one holder of U.S. debt in the world. But it might come to a point where they have to offload those to prop up their own currency. what kind of effect is that going to have on the U.S. markets? Are we going to see inflation? We don't know these things, but we do know on a long time horizon scale, 5 years, 10 years, 15 years, Bitcoin will make you money. It will bring you back value, and you'll have more money if you put 10,000 in Bitcoin now versus just 10,000 US dollars in a CD or in the S&P 500. In 10 years, you will have more money by putting it in Bitcoin than you will have in the S&P 500. I'm pretty confident in saying that. I'm also pretty confident in saying that Cam's Blue Wire Technology is an amazing sponsor of this channel. Today's crystal clear 4K stream would not be possible without them. Countless hours of on the phone, emails, in studio, flying out here to help us out with our studio. So if you want the same service, well, I don't know if they'll fly out to you, but hey, at least you could pick up the phone and call them or visit bluewiretech.com. They'll help you focus on your business so you can make money for your business. Let's talk about some overall flows. This is from CoinShares. So this is ranked flows last week. We saw, I think the net was, where did we go? 435 million in outflows, okay, last week. Now, where did the money flow out of? Well, obviously the big one here is BTC. 422 million flowed out of Bitcoin. That's ETFs included. 38.4 million flowed out of Ethereum. Some positive flows though. Stacks, Phantom, Filecoin, Chainlink, Litecoin, and the top one is Solana. 4.13 million flowed in from the institutional side. Now, we know Solana's price did get up to rallied from $9 to over $200. We're talking about a top 5 crypto asset here that had a massive rally towards the end/beginning of the end of the bear market, beginning of the bull market. Are institutions going to start piling into Solana? Could we see a CME listing for futures, which could potentially lead to a spot Solana ETF? I think before anything, we got to see what they do with Ethereum. I feel like, Forrest, we've talked about this. Unless you've changed your stance, I think we're going to get a denial here in May. They did push the Franklin Templeton back to June. What's going to happen there? Who knows? But we know that the final deadline, I believe, for BlackRock or Fidelity is this coming month in May. And so what is that going to do? We also have some Ethereum news we'll share with you here in a second. But I do want to talk about this, Forrest. So, in the beginning of April, I showed, hey, look, April historically has been one of the most bullish months for BTC. We are currently sitting at negative 11.75% return. So Bitcoin has drawn down 11.75% in the month of April. Also, I'm going to pull up a chart here on BTC, Forrest, and I'm going to go to the weekly chart on. I'm going to go to the weekly chart here on Bitcoin. And why? Let's see here. Anyways, Forrest, while I figure this out, can you pull up Bitcoin on the weekly candles?
Sure.
And you'll notice, I think it's 4 or 5 consecutive weekly red candles, which we don't typically see in bull markets. So it's caused a lot of people to say, did we already get our top? What is your thesis going into this week of the markets and how Bitcoin's price action has rallied? And what are your thoughts on that? People are saying, hey, we've never seen this type of price action on the weekly chart in a bull market. Yes, we get pullbacks, but not 4 or 5 consecutive red candles.
Yeah, so I've got my Bitcoin chart pulled up here. My candles are white instead of red, but the down candles are, red candles, right? So yeah, 1, 2, 3, 4, and we're trying to print the 5th, right? Or are we at 1, 2, 3, 4? Yeah, so this would be the 5th. So it's not printed yet, right? So there's no guarantees that we do print the 5th red candle of death as the people would make it out to be. Look, even if we do, my stance has remained pretty unchanged here. We got to maybe the 3-day, you can see it a little bit better. We have this wick that is just a juicy target to potentially come, price to potentially come down and flush that target out. Probably a lot of liquidity down there. Same thing with 50K to the downside if we do break below this. But as far as I'm concerned, we're just still very much in a bull flag, right? We're just in a pretty textbook bull flag. If we, start closing candles down here below 59K, yeah, I've got to reassess and be a little bit more bearish. But for right now, this is a pretty normal consolidation, something that I would say is a pretty healthy consolidation after what was it, 91% increase in price. If you didn't get a 19-20% pullback, it'd be a little bit weird. And the longer we consolidate, I feel like the healthier it is. Look, I am bullish going into May and June, and really I'm kind of bullish for the next 6 months. Just based on some time-based stuff and some analysis that I'll be putting out in through my channel and website. But yeah, I mean, this is a lot of like tax, long-term capital gains tax selling, and just, pretty normal correction after this, huge hype. So I still remain bullish. If we print the 5th weekly red candle, there's nothing written in stone that says, oh, Bitcoin, pack it up. This chart, 5 weekly red candles in a row, it can only go down from here. There's no such thing as that. It's normal for things. 5 weeks, 35 days. Is it weird for Bitcoin to consolidate and pull back for 35 days after 100% run? I don't think it's that weird. So yeah, I think we're still in good shape.
Hey, what are your thoughts on the whole sell in May and walk away thesis?
I'll turn my screen off here. So the idea, I'm not going to trade based off of a nursery rhyme. But more so than that, the reason that even exists is because a lot of times markets in general during the summer months are a little less volatile, a little bit more boring. You just have less going on. You've got a lot of vacationing happening from the Wall Street people. But I don't think that's any reason why a market can't move up if there's a reason for it to, or down for that matter. So yeah, it's like May, June, July, you kind of get like a muted volatility, is kind of a slower time of the year. But we're in an election year. We're seeing just a ton of macro headlines all over the place. I wouldn't be surprised if we got the opposite of that. I wouldn't be surprised if we saw a lot of volatility this summer as opposed to last summer when things were actually pretty muted.
Awesome. All right. We are going to bring on Sergio Solano. He is the founder of Validity. If you watch our show to the end, you also know that they're a sponsor of this channel. They are doing something in DeFi that could potentially solve one of the biggest problems that has been hounding the crypto industry. So we're excited to bring him on and introduce you to Sergio. So let's bring him on. Sergio, how you doing?
Hey, how are you? Happy to be here.
Hey, man, great to have you. Thank you so much for joining us. Sergio, I kind of want to get your take on something. Bull market after bull market, bear market, just any time in crypto, we've always seen thousands of coins being launched. Vast majority of them end up being pump and dumps, rug pulls, anonymous founders. No one's doxxed. Pre-sales, send Solana or Ethereum to this address and we'll give you a pre-sale. And then they either keep the money or they only put up 1% of the money they raise as liquidity. What are your thoughts on the ideas of pump and dumps, rug pull? And what are your thoughts on some of the solutions moving forward? And how can people, maybe someone watching has been rug pulled or has been in a pump and dump. What are some things people can do, or your thesis on this moving forward and how it impacts the crypto industry as a whole?
I think it impacts a very negative way. And it's pretty sad because I feel that blockchain and cryptocurrency were created to resolve those issues. Some of these issues is not new to the world, like they've been in Wall Street for years to come. And I think cryptocurrency and the blockchain, what they became is adding transparency, that everyone can see every single transaction, see how many holders, et cetera, et cetera. And I think these people that have been pump and dump, have been rug pull, they haven't really learned how to use the blockchain in the proper way. So it's very sad. I think it gives a narrative around cryptocurrency and blockchain technology as just being a scam. But I think through time, we'll consistently be resolving those issues. And that was one of our main things that we wanted to focus on with Validity, is to create an ecosystem that the community can check by themselves, learn how to use the protocol, and they can feel that safety that this can't be rug pulled, this can't be pumped and dumped.
Now, what are some now? I know that's one. I mean, one of the bigger narratives with Validity. What are some of the impacts of how is Validity set up to where it does protect them against these rug pulls and these pump and dumps? Maybe get into some of the intricacies of how the network actually works to protect against those things.
So the most important thing is when users get to see what Validity is. Validity is a protocol that generates Ethereum. So each token consistently generates Ethereum, and you can see the Ethereum that's backing each coin. Not only that you can see it on the blockchain, and you can see the smart contract that holds that Ethereum, you can see how many transactions it has, you can see the code, and when the code is out on Ethereum, it cannot be changed. Not only that, that has been audited by the number one auditing firm, Certec. But as soon as you have Validity, you can access that Ethereum. So you already have a big amount of your capital out. So you know it can never be rug pull because it has already that liquidity behind it. So right now we launched on Uniswap at the beginning of this month. We launched our first liquidity pool. We have around $400,000 in liquidity for users to buy in and get out. But let's say they think, okay, what about if this liquidity gets pulled, it gets rug pulled, and I'm stuck with a token that I can't sell? The great thing about it is that you can right away go to our ecosystem. You can see the Ethereum that's backing each token, and without even having to sell it, you can claim that Ethereum. So you are more convinced that it cannot be rug pulled since it has that Ethereum backing it.
That's very interesting. And I've invested in a couple rug pulls, pump and dumps. I'm sure people watching, if you've been in crypto long enough, right, you've probably fallen to one of these scams at some point. So I think it's important. The way to build trust is instead of the trust me, bro, we're good. We're gonna give you your coins. We're gonna add more liquidity. Instead of doing
Yes.
that, hey, here it is. Go check for yourself. Sergio,
The great thing
go ahead.
One thing I wanted to add to that is that that's the point of blockchain and decentralization. You don't have to trust me. Don't trust me. That's what cryptocurrency really is. Go to the blockchain, see the liquidity, see the smart contract, see how it works. That's why it's called trustless. You don't have to trust anybody. You don't have to trust a central point or a corporation or one person. You're trusting the blockchain, and that's the community, right? That's no one has an access to that.
Yeah, some people have a hard enough time trusting like some family members, let alone some random undoxed founder. Speaking of
Yes.
that, I know you guys got the highest rank from Certec as far as doxing founders. Why do some people who launch protocols why do they not dox themselves? Why don't they say, hey, this is our team, here's a face to the project? Is it always only because they're looking to scam people, or are there other reasons in your opinion? And why did you
No.
guys decide to go down that route of, hey, here's our entire team, here's where we live, here's our phone numbers, here's our net worth, here's everything you need to know. That way, if people can reach out to us or hold us accountable if need be.
Mhm. I think the main issue that's going on is that unfortunately people are getting scared with the whole thing that's going on with the SEC, and that they've been trying to slow down the progress of cryptocurrency. So I think it's mostly that they're scared of getting into legal issues. We were very diligent with how we pushed our product and grew our ecosystem in a way that it can't be said that is maybe a security or et cetera, et cetera. And we have really good lawyers on our team that we feel very confident that if any does problem come, we're able to solve it.
Sergio, what are your thoughts on, and this is just your, just want to get your kind of opinion here. What are your thoughts on what's happening here in the US with the SEC, being that Validity is 100% decentralized, everything is ran by smart contracts. Do you feel confident
Yes.
that Validity won't be in the crosshairs of the SEC? Do you think that gives you an
Yeah.
advantage over some of the other protocols? We saw Uniswap get a Wells notice. We've seen
Yes.
exchanges get sued by the SEC. What are your thoughts on the landscape
Yes.
and how Validity is positioned moving forward?
I think what's happening right now is very normal. We're transacting from or changing from what it was stocks and all this centralized into this new era of decentralization where governments and these corporations don't have much control. Whatever is new is scary until they understand it. By the end of the day, this has been adopted around the world. They cannot stop it. And I think they're hurting themselves a little bit more. Their main purpose is to protect investors. And as we've seen, what they've done is the complete opposite. I feel that, first of all, what we need to do is that keep educating the community, keep educating maybe even these governments to see that this is greater for good.
Yeah. Sergio, I just wanted to thank you so much for joining us. It was a pleasure speaking to you, my friend. We look forward to bringing you on again. I'm going to drop the Validity website in the chat. So if you guys want more information, you want to dig into the ecosystem, there's a lot of great videos on there. Like Sergio said, don't trust me, bro. Go find out for yourself. This is a project going into the bull market that if people start learning about it, and we're going to do our part here to kind of show people and teach people along with you, Sergio, and your team. Go to the website and do some digging. Spend some time. Go in there. Download the app. They have a wallet on. I believe it's on. I know I have it on iOS. I believe it's on Android as well. Yes. Correct, Sergio?
Yes, it's already on iOS and Android. But you can use our ecosystem with any wallet. You can download Uniswap, Trust Wallet. You can just connect with it. We have our own wallet just to have a better user experience. But it is a completely decentralized app that you can connect through Wallet Connect or MetaMask, etc.
Amazing. Sergio, thank you for your time, my friend, and enjoy the rest of your day. And we look forward to talking to you soon.
Thank you very much for having me.
Take care, brother.
Bye.
All right. Guys, I'm looking at our metrics here. We have 203 people watching, only 70 likes. Robin, I need to call on you here. What? Can we maybe yell at some people here? What's going on here, man? 70 likes. Guys, we can do better than that. Where's that damn likes? Anyways, I'll look for the like sign. Do me a favor in the meanwhile, like the video. Also, if you're new here, say hello. We'd love to personally welcome you and give you an all-off. A lot of things happening this week when it comes to macro that could potentially affect Bitcoin and the cryptocurrency market's price action. We have here from the Kobayashi letter, probably butchered that pronunciation in honor of Robin. I'm going to go back here. So tomorrow we have consumer confidence data coming in. Wednesday, big one, JOLTS jobs report, the job openings and labor turnover. And then also on Wednesday, FOMC. Will we see a rate hike? We've seen inflation start to tick up on the core and on PCE and on CPI headline. What will the Fed do? You know what? Let's go to the CME and let's see what the traders are thinking we're going to see. So, all right, they think we're going to hold steady here. So 97% believe that the rate will remain unchanged. And then also Friday, we have some non-manufacturing PMI data. And then the April jobs report comes out Friday, which don't worry, guys, it'll be revised 30,000 times. And then 6 months from now, when you forgot about it, the real numbers will come out. So, Forrest, what on this list are you most keeping your eye on and you think could potentially affect crypto and Bitcoin's price action?
Probably, I think the Fed interest rate decision's a nothing burger. I don't think they're going to hike. I don't think they're going to cut. I think they're going to sit still and Jerome Powell drone on about, the same things he said for the last couple of meetings, and nothing will really change. If we get like a surprise rate or hike, obviously that'll shake up the market quite a lot. Jobs data, again, like you said, it's kind of not super useful unless unemployment comes in super high. I'm not super alarmed. If it does, then yeah, that's a problem. But like you said, it'll probably be readjusted later on. Earnings season is usually solid.
I didn't even go. I didn't even highlight that one, right? Around 20% of all S&P 500 companies are going to report their earnings this week.
I think Janet Yellen has a big meeting this week too. I don't know if it's this week or next week.
This week.
Like some quarterly treasury thing that I read is potentially really important, just because it's just kind of shows how much liquidity she's going to inject before the election. So I'll be keeping an eye out for that. But I don't have the name of that, unfortunately. I just saw it in a tweet.
We saw Tesla underperform on earnings and they rallied, and we saw Meta beat earnings and they declined. So who knows what the hell is going to go on?
Yeah.
But I agree with you, Forrest. I think the Fed rate decision, and I don't think we're going to get a hike. I mean, we saw a bank. There was another bank, Bank First Core Bank, or you know which one I'm talking about? That kind of got
First Republic, maybe?
No, it was a different one. I'll look it up when I have a second. But another bank essentially went under. The FDIC had to come in and take ownership of that bank. And so could the Fed look at that and be like, yeah, we're going to hike rates? I don't think so. I think sooner than later, we're going to get a rate cut, although that's probably not what they should be doing. They're kind of in a weird position, right? Their hands are kind of tied. And then we had news that Russia was banning Bitcoin. But again, guys, it's important to not just read and just base your reactions off of headlines. It's important to actually read the substance and the context. So everyone was tweeting, hey, Russia's banning Bitcoin. Not necessarily. So this is directly from the excerpt here. They're banning the creation of exchanges and exchangers outside the zone of operation of the experimental legal regime. What you guys got to understand is this, is that cryptocurrency and Bitcoin is essentially an opt-out of the system. When you take your dollars or your rubles or your yen or your yuan, you take it away from Republic First Bank. Republic First Bank, that's what it was. Thank you. When you take that fiat currency out of the bank and onto a crypto exchange, and then you pull it off of the exchange, even if you leave it on the exchange, that money now has left that slosh bucket, their ecosystem of sending fake money and just numbers on a screen back and forth. So it draws liquidity away, which of course is not good for the people that are running the Ponzi scheme, aka the governments who run the fiat currencies. And so, of course, it is a direct, I don't want to say competitor, but it's a direct threat to their entire system. Imagine if 20% of US adults put in $1,000 into crypto and didn't move it back into the fiat ecosystem. That could potentially crumble the entire thing, right? Liquidity dries up, Fed starts to cut rates, inject liquidity, quantitative easing, inflation goes up. It's a complete shit show. And so you're going to see more and more governments try to do this, but I think ultimately we're at a point now where Bitcoin is decentralized enough, some cryptocurrencies are decentralized enough to where unless you shut the internet off, there's really nothing you can do to stop it. So that's the beauty of it. And then we have this for us. This is very, very, very interesting. Forbes came out with the good for nothing blockchains. And allow me to elaborate just a little bit. So these are the 20 blockchains below command a total market value of 100 billion, despite the fact that they are unproven and have little utility other than speculative crypto trading. They list XRP, Cardano, Bitcoin Cash, Litecoin, ICP, Ethereum Classic, Stellar Lumens, Stacks, Caspa, Theta, Phantom, Monero, Arweave, Algorand, Flow, Multiverse X, BSV, Mina, Tezos, and EOS. They list their treasury, they list their monthly active developers, and they list on the far right their comments. Let's start with what does not deserve to be on here and what kind of surprised you to see the coin listed on here?
Yeah, so I would agree. Like, there's a lot of like most of the chains in the space and most of the projects in the space are like not great, right? Or like they don't have demand yet. But I applaud like any legitimate projects that are trying to get demand. But I can also be bullish on things that might not have a lot of demand yet. I'm bullish on XRP, bullish on Litecoin, bullish on Stellar Lumens. Stacks, I think, is going to act as beta on Bitcoin. Caspa, I don't necessarily think it's a bad project, but I don't have a problem with it. Theta Network's fine. Phantom is fine. Monero's a great project. Actually, one of probably the project on here that has the most legitimate use case, and that's protecting privacy based. It's like Bitcoin, but transactions are private. Arweave is a legit project. Algorand, it's like, I'm not going to get into that. Flow, I could see, maybe, the NFT chain, whatever. That's fine. Not doesn't have but then it's like NFTs used to be huge. And like gaming, NFT gaming's huge. Like Bitcoin, Mina's solid. Not a big fan of Tezos or EOS, but also like the metric that they're using to do this is just the dumbest metric I've ever seen. Total network fees and then market cap to fee ratio. Yeah. Those are the two dumbest metrics you could ever do, because if your fees are super, super cheap, then your market cap to fee ratio is going to be like massive. It's going to be super, super high. Your total network fees, like you don't really want that to be high. Like, yes, it shows that there's some demand for the network, but if it's like too expensive to use the network, or you have high fees, then that number is going to be inflated. So, I think this was put together by people who just like aren't very in the very involved in the crypto ecosystem, don't really understand it. They just looked at like, what are the least popular projects, and we're going to toss them on here. I think, for example, Bitcoin Cash and Litecoin are going to get ETFs, and I think those are, I'm very bullish on both of those. Does that mean that they are dead chains or ghosts? I don't know. Like, do we need them? I don't know, but I'm still bullish on them. Like, still going to buy them.
Good for nothing blockchains. That's what it said. So Arweave, not sure why that's on here. ICP, not sure or have a clue why that's on here. Cardano, XRP. I know I talk crap about XRP, but I mean, like you said, Forrest, the metrics they're using are dumb. And so, of course, Ethereum won't be on here. I'm not saying that it should be on here, but of course, because it's got the highest fees. Stacks shouldn't be on here. Caspa, I can see why it's on here, right? I think like people are buying and speculating on Caspa for what it can do in the future. Because let's face it, it's got no smart contracts, no capabilities on it yet. I actually did a Caspa video that'll come out later today. And which project it is eerily similar to, and if it plays out like it did for that project in 2021, could we see like a 50 to 70x? I don't know. Maybe I discussed that in the video.
I feel like Phantom. I feel like we should do our own chart and be like good for nothing publications, right? And then we'll just put some metrics like how many news articles are read every day, or compared to subscribers, things of that nature. And so we could come up with a good for nothing.
What about good for nothing crypto YouTube channels?
Yeah, there are a list of those as well. Yeah,
we won't go down that rabbit hole.
We'll keep the list to ourselves internally, but
there's
a lot of old, boring, and stale information. We repackage that thing up in a fun and sexy way.
You know, you couldn't hold your tongue for more than 30 minutes, Robert. All right, and then kind of putting it together here, you had Dominic Williams, the founder of Dfinity, founder of Internet Computer ICP, says crypto has a snake oil problem. Okay. Now, what does he mean by that? A couple quotes from him here. It's gotten to a place where people actually invest in snake oil. Like, who's got the best snake oil? I'm going to invest in that because their marketing is better. Today, there's a lot of confusion and people are just buying into these narratives. And I think that's the biggest challenge facing the industry today. He goes on to say, there's a lot of junk, frankly, like 95% of the blockchains out there are just junk, and they're selling snake oil. It is no longer about the technology. It's often about who can spin the best narrative and make that sound the most convincing, with websites pretending the product is finished or does something that it doesn't. I tend to agree with Dominic here. You saw like when AI started booming, right? Everyone rushed to attach an AI narrative to what they're doing when realistically you had nothing to do with AI. You just wanted part of that pump, right? What are your thoughts on what Dominic here is saying for us? Do you kind of agree that 95% of the blockchains, crypto projects are just selling people snake oil?
Yeah, I'd probably even go higher than that. I'd say like 99%. But that being said, I do think there's a lot of like, I wouldn't go as far as to say like all of them are selling snake oil. I think a lot of them are genuinely out there trying to make, trying to change the world in some way or another. Trying, like, you don't get that one or two meaningful, you don't get Amazon without all of the, the other websites that tried to make something happen in the .com bubble and didn't survive. Also the point, like, this guy's been like very outspoken in a negative way against Solana, and I like disagree with, like, in his viewpoint from the tweets that he's made, like Solana falls into this category of snake oil, and it's just like, I don't know if I agree with that. It's like the most popular, one of the most popular blockchains, is like used the most. Yeah, I mean, like, I agree, but I don't know if I agree with like specifically the same projects that he probably agrees with. But yeah, there's just a lot of garbage out there. Most stuff in general is like going to go down. Like, even like if Bitcoin sees a 60-70% drawdown in a bear market, 50%, 40, I don't know what it'll be. All these altcoins are going to go, worse than that. We've seen it happen time and time again. There's a lot of money to be made in the meantime. But most stuff in crypto and this AI bubble and narrative are just, they're going to see overinflated valuations, and that'll pop at some point. So yeah, be careful. The big mistake I see way too many people make is they'll buy some altcoin as a long-term hold, when in reality, it's just like, there's nothing, it's not a great project. And if the investment doesn't work out for them, they just kind of write it off and say, oh, I'll just hold it until next market cycle or until it bounces back. And it never does.
Joke's on you, Dominic Williams. Oil is up 30% since December of last year, as you can see by the chart here. Thank you very much. All jokes aside, I do agree, Forrest. I don't think Solana does fit in that snake oil category. The amount of people using it, right? You have the whole stablecoin integration with Visa, with Stripe, right? Stripe wasn't Solana. Was Stripe Solana? Stripe was Ethereum, Polygon, and Solana, right? Solana. Okay, cool.
Solana, yeah.
Speaking of Stripe, they added another blockchain, and that blockchain is Avalanche. So this is pretty big. I know you and Rob talked about this on Friday, but guys, 99% of people who have went to a small business, whether it's a restaurant, a store, or whatever, you've probably of course you didn't know this, but you've probably used Stripe on the back end. They're a giant in the world of payment processing. If you remember, back in 2020 or 2021, they tried to do it with Bitcoin, then it kind of fell off and they went quiet. And now they've decided to do USDC, not USDT, USDC, Polygon, Ethereum, and Solana, and now, of course, Avalanche. So this is pretty big for AVAX. So payment processor Stripe is going all in on crypto, it seems, as it today announces the integration of Avalanche. Just last week, it announced it was allowing companies to use this technology to accept USDC stablecoins for online payments. A widget will be installed in Core, which is an Avalanche wallet, allowing anyone to buy Avalanche's native token using debit or credit cards without going through an exchange. And Stripe will take care of all things related to KYC, the announcement read. Of course, we talk about pain points, ease of use, barriers, right? Being able to buy directly from Stripe using a credit or debit card. We talked about the whole Trump NFTs, why they were so successful. One of the things you brought up for us when we talked about this was, hey, you can go to the website, just buy with a credit card, right? So it's easy for non-crypto native people to be able to get exposure and have access to that. So this is pretty big. And if we take a look at how Avalanche reacted to the news, well, it didn't. It's down 0.14% over the 24 hours, but to be fair, everything is down. And so, Forrest, what are your thoughts on this news for Avalanche and Stripe and integrations? And do you foresee maybe more integrations coming in the future?
Yeah, I mean, I think this is one of the best use cases for crypto, stablecoin, and payments, right? And obviously, you can do that on a variety of different chains, but the fact that Stripe is going in and integrating and facilitating this just shows you how big the use case really is. Look at all the people that look at all the people that don't want to keep their money in a bank, or like, you can actually, like, if you can go and spend your USDC, you can actually like take your money out of a bank, put it into DeFi and earn like 5 to 7% yield, or, or whatever percentage yield, depending on your risk tolerance. And instead of the bank getting that 5 to 7% return that they're going out and lending and getting they're lending your money and keeping that 5 to 7% yield for themselves, and then giving you like a 0.01% savings account yield. Instead of them
zero.
getting to keep that, you can like
Better than zero.
Yeah, better than zero. You could, keep your money in DeFi or wherever you want to keep it, or just custody it on your phone in a wallet, by yourself, just so that the bank doesn't have it and you're not in a situation where there's a bank run. And use stable coins to pay for groceries and like, I've long since been opposed to the idea. Like, I think like people will hold Bitcoin, people will hold Ethereum, but I don't see them using Bitcoin to pay for groceries, at least not for a while, at least not for a long time. But absolutely, USDC for groceries makes so much sense. If you can go and do Apple Pay or tap your phone or whatever, swipe your card, and it takes money out of your USDC wallet and pays for that, makes so much sense. I think it's a great integration for crypto, and probably one of the use cases I'm the most bullish on moving forward.
I agree, Forrest. Let me throw some your way. Let me get your take on this. We talk about, countries that are not only offloading US debt, but are also not storing a lot of their value in the dollar anymore after what happened with Russia. I talked about Japan maybe having to sell off some US treasuries. Could the rise of stable coins save the US from hyperinflation, from massive amounts of printing that end up staying in the United States because countries are not buying? Because in every stablecoin regulation bill that's been proposed, they have to be backed one by one with cash, with very liquid or cash equivalent assets, aka US treasuries. We know Tether is the 23rd or 25th largest holder of US debt in the world, and they're obviously the largest stablecoin. Could the growth of stablecoins potentially save the dollar, or at least push back the inevitability of the fiat currency crisis crumbling?
I would say no. It might have a small effect. Look, you look at the dollar, and it probably continues to outperform to some degree a vast majority of the currencies out there, the foreign currencies. So, for example, the yen has been crashing really, really bad. If you live in Japan, but you're on a US dollar salary, or you hold US dollars, your purchasing power in Japan has gone up dramatically because you're holding a stronger currency than the yen. But fundamentally, what is your dollars are still long term going to lose the vast majority of their purchasing power against commodities like gold, silver, or even potentially Bitcoin. Commodities even beyond that, you talk about the price of oil, the price of wheat, the price of coffee bean, whatever
Cocoa.
it is, your purchasing power of the dollars always going to lose value. And the reason, the problem, and it doesn't really matter if we get adoption in the form of stable coins, and that causes a bid in treasuries, that offsets some of they're just going to continue to spend and print debt. They are going, like, that is the fundamental issue. If you just print $95 billion and you send it to a foreign country, like we just recently did, and like we've been doing for the last several years, and then you just continue to issue short-term treasury bonds, short-term debt that comes due in a year or two, and you have to pay a high interest rate on it, like Janet Yellen's been doing, you end up having a debt crisis and a fiat currency crisis and an inflation crisis. That is the root of the problem. That, and you can get into like energy prices, and we have, high energy prices, that's, gets into the political, but the fundamental issue as to why we see the erosion of purchasing power of the US dollar over time versus like commodities, is simply because of the printing of money and the issuing of debt. That is it. And I do not foresee that slowing down or stopping anytime soon. So Yeah, stable coins, it might help, the adoption of USDC or stable coins just in general. If they're US based stable coins, US dollar backed stable coins, it might help US dollars outperform other foreign currencies that aren't seeing that same level of adoption. And you could be in Japan using a USDC stable coin and preserve some purchasing power, but you're just like what's the saying? I'm trying to think of the analogy. It's like you're the cleanest pig in the pen, right? You're still a pig. You're still covered in mud. You're just the cleanest. Like the dollar's it's like the cleanest pig in the pen. It's still garbage, and still going to lose value. But it might help. If you're in a country, it might help to use stable coins versus whatever Turkish lira or whatever is losing tons and tons of value and has higher hyperinflation than the U.S. dollar does. So. Long-winded answer there, but yeah, I think the US dollar is still going to lose a lot of value.
Yeah, and eventually, fiat currency is going to collapse. I mean, you guys got to remember, it's only in the last 55, 60 years that we've had currency not backed by a commodity or a hard asset. So this has essentially been a 55, 60 year experiment that has failed. Like, for you to make $100,000 a year and you're considered like not even middle class, I mean, it's kind of ridiculous. My wife texted me yesterday. She's like, "Hey, 40 case bottled water I used to buy for $3.20 is $6. $6. What is that? 100% increase in a matter of what? A year and a half, 2 years? It's ridiculous, and it's only going to get worse. So why are we saying this? To protect yourself, to protect your family, your wealth, your assets. Be in stuff like gold, silver, Bitcoin, hard assets that they cannot manipulate. Speaking of Bitcoin, let's take a look at the cryptocurrency markets. Bitcoin currently sitting at 62,778 United States toilet paper dollars. Ethereum, for us, had a decent rally, 3168. BNB at 590. Solana, $134. Down 27% over the last week, 12.7%. Over the last 27% of the last 30 days, 12% over the last 7 days. XRP, Doge, Toncoin, and Cardano around at the top 10. And then just take a look at the crypto bubbles. Just so you can see everything is red with the exception of SEI and HNT, right? Helium Network Token. For us, anything on the market cap list that kind of stands out to you as far as maybe a good entry, or maybe, hey, this chart looks like it might have some more downside. Near protocol rallied up to over $7.50. Status pulled back. Chainlink under $14. We know CCIP went live to the public general audience. So a lot of big narratives happening, but prices aren't reacting. Again, the Avalanche with the Stripe thing. Anything kind of catch your attention or that you're kind of eyeing for maybe a trade setup or at a support level where you're looking to maybe add to your bag?
Yeah, so I think there's going to be a rotation into Ethereum and Ethereum beta. So anything that's like an L2 or like DeFi, anything that's like or like Ondo Finance, right? Real world assets on Ethereum. Reason being is I do believe that the risk of betting on the Ethereum ETF is decaying at an exponential pace, meaning like we have like 40 days until the deadline. I think the final deadline for that is like June 11th. And I don't think that we're going to get an Ethereum ETF approval. But then again, BlackRock did submit BlackRock just doesn't get denied. I don't know if all of this stuff with SEC is theatrics or not, but I would expect fundamentally that even though I don't believe that we're going to get an Ethereum ETF approval, I think there's going to be a lot of market participants that look at this as an opportunity to bet on Ethereum. And if they're right, probably make a lot of money. So if we do get an ETH ETF approval in June or whatever the final date is, I would expect ETH to explode, right? Because nobody expects it at the moment. And the market hasn't priced it in. So I think as we get closer and closer to that date, you're going to see more and more of a bid into Ethereum. That's if Bitcoin cooperates, and that's if the rest of the market cooperates in the meantime. Overall, I think the most important chart to be paying attention to right now is simply Bitcoin. It's in that big bull flag. If it breaks out of the bottom of that thing and starts dropping, then that's problematic, and we need to talk about de-risking and potentially getting out of the market, looking for short opportunities, ways to hedge. But otherwise, if we break out of the top of Bitcoin, that bull flag, that's the trigger. That's the trigger for everything to potentially start moving up again. And I could see alts just continuing to bleed until we actually get a breakout in Bitcoin. Bitcoin's been going sideways for almost 60 days, and that's about as long as it likes to. 60 to 90 days at a time, Bitcoin will move sideways. But then once you start breaking out in one direction or the other after a consolidation like that is usually when things start to get volatile again. And I do expect my base case is a move upwards. So I'd say pay attention to Bitcoin, but I do think now is a reasonable time to be also looking at the ETH chart into that ETF decision.
Awesome. Forrest, I know you got some things to take care of. We're going to let you go, my friend. Always a pleasure having you on. We'll see you tomorrow. Excited to see what news will drop after we're done today. Talk about tomorrow. So, Forrest, thank you, brother. We'll see you mañana.
Sounds good. Thanks for having me. See you guys tomorrow. Peace.
Peace. All right. So, I want to share this. I was on your screen for a second, and then I'll show you some Bitcoin stats. So this is from Cointelegraph. 6-month low Ethereum fee suggests alt season is inbound. This is from Sentiment. On April 27th, the average fee for an Ethereum transaction fell as low as $1. Oh my God, $1. I didn't know what to do with myself. Should I buy a meme coin? Should I mint an NFT? What should I do? Oh my God.
That's the base.
So this is from Sentiment. They wrote, quote, traders historically move between sentimental cycles of feeling that crypto is going to the moon or feeling that crypto is dead. We are so fickle in our sentiment, guys. And I do it sometimes too. You get into this euphoria or you get into the downside, but as you stay in the space longer, those moments diminish. So this is your first cycle, and your emotions are like a roller coaster. Just zoom out. Zoom out. Don't look at the 1 hour, the 4 hour. Don't check your portfolio every 5 seconds. Zoom out. Check it every week. Check it every month. Check it every 3 months. But if you zoom out enough, you'll see it continues to go up. There are some blips along the way, some dips, but it continues to go up.
So let me get this straight. It was at $1 for an ETH transaction? Did I hear right?
Translation. Yeah, it was at $1, yeah.
Is it still there? I'm about to just start sending.
Probably not.
I'm going to just start sending all the friends and family ETH.
So 12 Gwei, wow. It's pretty damn low. So yeah. But the article does go on to say they explain that fees tend to peak around local market tops and fall back to a resting state around the time of market bottoms. So the thesis here, and I'll read one more thing before I talk about the thesis. With markets mainly retracing over the past 6 weeks, the lack of demand and strain on the network may help turn ETH and associated altcoins around sooner than many expect. So is altcoin season coming? Potentially, yeah. I mean, look, when the fear and greed index, we go back here, take a look at the fear and greed index. We're at a 57, which is currently considered neutral. This is total crypto, not just Bitcoin. And so we did see, people get euphoric. We see that fear and greed index get up to the 80s, 90s, sometimes getting up to the mid 90s, and people are euphoric. They're like, oh my God, we're going to the moon. Let me dump all my life savings. And then we see a little bit of a dip and everyone starts to panic. Just a cycle of crypto and Bitcoin. But I want to show you something from BTC. This is from Into the Block. Addresses by time held. Guys, 70% of all Bitcoin currently has been held over the last 1 year. So people are not selling Bitcoin. The issuance just got cut in half, right? From the halving, 900 a day to 450 a day. Once demand starts ticking up, it's not going to take as much demand as we needed a week ago as we will moving forward because of obviously the halving with the ETFs, Hong Kong, Australia. We know we're going to get probably a Fed cut here. Election year, they want to prop up the economy. Man, maybe not over the next week or the next 3 days, but again, you zoom out. Things are looking great, man, and don't let anyone tell you otherwise. that'll do it for the show today.
I did want to give a little love to the chat, though. We got a couple new people. I got Consensus, Marcus, Eric Reyes, Nat Singer, Rick, Ben Simmons, Vision, Dan L, Wanderer, A Real Gamer, all of you. Hola! Welcome. If you guys are wondering why I'm back here, we're just kind of tweaking and changing some stuff around and getting ready for our new desk.
Don't lie. You know you wanted to spend more
Should
time
be
with
here.
Rocco.
I did. I did want to spend more time with Rocco.
I don't know if Rocco wants to spend more time with you, but that's, I guess, irrelevant. Guys, do want to give one more big shout out to channel sponsor Cam's Blue Wire Technology. You want to learn how they can help your business scale and grow? Visit bluewiretech.com. Big thank you to Sergio and big thank you to Forrest. If you're a Caspa fan, you're going to want to watch the video. We got a Caspa video coming out. Could Caspa 70X? Sounds crazy. Hopium? Maybe. But I explained my reasons why. You're going to want to watch the video. Members get access first. So big shout out to members and everyone that supports this channel. And then it'll go public there shortly after. That's all we got. Anything else on your guys' end there?
No.
No, all good here.
With that being said, Robin. You know, there was a big tornado in freaking Nebraska. Did you guys see that? Oh, shit.
So we're going to get the meteorologist Dave back.
Maybe,
missed
potentially.
him.
Anyways, guys,
If you didn't know, Dave used to do Las Vegas news every day when we ran the show. Every morning.
See you tomorrow.
So every day stay tapped in. For big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Named according to your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy the dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon, then to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado close ya.